What's going on, guys? How's it going? Let me put the camera on myself for a second. How we doing? How we doing? Welcome. I'm looking in the wrong direction. One sec. There we go. A little bit of eye contact. What's going on? Hopefully everybody is doing well. Should we put on background music? Should we put background music on? I have, maybe let's play the most epic playlist. What do we have? We have 2 Steps from Hell. That wasn't my wife's playlist. That's a non-copyright playlist. So I get into trouble on YouTube all the time. So this will get removed. So I have to put on the non-copyright stuff, which happens to be a lot of like drum and bass. So we'll get started. One sec. How's the sound? How's the microphone? Closer to the mic, voice is clear. Okay. Battle cry. Sound good? Just give me a sound check, guys. I'm not going to answer questions right away. I just want a sound check. Great, good. Let's go to the main screen. Cool. All right, so good morning, good evening, good afternoon. Hopefully you guys are doing well. We're going to get started in a minute, but if you're not subscribed to the channel, make sure that you hit that subscribe button. Make sure that you hit the like button. I've been doing this very consistently now. We appreciate the feedback. So if you want to leave any feedback in the comments, that would be appreciated. Any of your thoughts, how we can make these videos better, make sure you hit the like button as well. Again, remember, none of what I say is financial advice. Strictly for entertainment purposes only. Just my opinions, and that's it. So you have to make sure that you put yourself in a position where you can also, come to your own conclusions and develop your own opinions on the market. So yeah. All right. So got some familiar faces. Just say hi to everybody. What do we got? Cornholio, PPJ, what's up? Doc, what's going on, man? Doc, looked like you had a good little vacation a couple miles away from me. Boov, Marco, Dodona, Asgard, what's up? Brian, Chris with a beard. Chris still with a beard, good. Yes, of course we're gonna have another cycle. Markets just move in cycles. Like there's nothing unique about it. That's because really there's nothing unique about people. They just do the same things over and over again. Overcommit, undercommit, it's a yin and yang. Yeah, the playlist, sorry about that. I do, like I said, have a very eclectic taste in music. I'll handle this really quickly. The OI, it's difficult to tell unless you're looking at some measure of delta. So, in general, if price is going up, it's pretty clear price is in an uptrend and open interest is going up. You could more or less assume that a majority of that open interest is due to aggressive buying activity, aggro buyers. And the opposite is if price is in a sustained downtrend and open interest is going up. Obviously, open interest can go up through passive participants, right? It's contracts opened. So you could open passively. It doesn't mean you have to open just aggressively, but net long or short, combination of direction, whether or not open interest is matching price, and yeah, it's much easier evidenced or better evidenced when you're looking at some form of delta. So CVD is cumulative volume delta, so that is helpful. Yes. Sound is great. Good. Yeah, you could watch the stream anytime. They're all recorded. Okay. I don't really care for fish. No. All right. So, yeah. So that aggro setup is not It's not from me. That Agger setup is I shared whoever was originally responsible for the Agger setup. I was making a joke recently about Agger setups that are on Twitter because there are these really elaborate setups, and the original setup, the setup that I shared is a little bit modified from the original. I still find that a lot of people, in crypto especially, because there's a lot of newer traders and now there's a lot more interest in order flow. And I think that's, it's a great thing, because that's one of the most important components of the market. It's the orders that actually drive activity, or the activity rather that drive price. So, understanding how, what's taking place in the underlying activity, who's the aggressor, where participation is coming into the market, things that fall under the realm of order flow, are extremely beneficial for trading any asset class. Some assets trade differently. Some assets have cleaner order flow. Some assets are thicker, thinner. But it's become so popular lately, and there's more like gizmos and gadgets that are around it because, it's kind of like when something becomes popular, you could sell the picks and shovels, right? The people that made the most money during the gold rush were the ones that sold the picks and shovels. And so anytime something becomes popular on crypto Twitter, there's a ton of businesses that come out around it, take advantage of that new interest, and sell products and services that cater to those new interests. So with that being said, there's a ton of new order flow suites and order flow, software. And Agger's been around for a while, but it's only been recently that it's really gone from just a platform that has like a chart and a tape. It's become much more customizable, or just it's become much more customized by individuals. And I see that like there is this push towards over complexity. And when you first get involved in trading, you think that you'd be better off if you knew everything that was going on, but you just can never. You can't. It's like a worthless pursuit to try to have an idea of exactly what's going on all over the place, especially in a market that's really disconnected and fragmented like this one. So a lot of people that get involved in order flow, they have like these crazy elaborate order flow suites where they're looking at every single exchange, looking at every exchange's perp, every exchange's spot CVD, filtering them 10 different ways, looking at, the market in a very, order flow is looking at the market in a more, looking at the footprint is looking at a candlestick in a more atomized or granular way. So, there's limitations to that though, right? And it's not like you don't gain a massive edge. You're trying to gain a little bit more of an edge in markets. But, what I've seen is with the Agger, people have crazy elaborate setups, and I know that they're not helpful. I know that honestly, you're better off simplifying them a little bit because you reduce the noise to some degree. You can only process so much, especially since you are not a computer. You are looking at these things with your eyes. You're processing that. That signal takes time to process. Being able to even focus on all that is very difficult. So my Agger suite, I've shared it on Telegram. This is a long Agger spiel, right? But I've somewhat simplified it, but it is a very, very useful tool. I think, it's good to kind of go off on these little tangents because I think sometimes it's important to hear these things from someone who's been doing this for a while because, again, they look cool. That's the thing. Like, it looks cool, right? Oh my God, I have all this information about what's going on across the market. And it's like, nah, dude, you're adding too much complexity. You're making it really difficult to pull anything out of that. Less is absolutely more. Keep it simple, stupid, right? The KISS method. There's something like, there's obviously something to be said for having too little information, but there's a sweet spot to be found. So, anyway, a couple things I want to go over really quickly, and I think this is valuable information. And this is not, Josh has been, we've been talking about Phemex for a really long time. We talk about Phemex, talk about how it's non-KYC still, unless you want to pay for the, you don't want fees, you could KYC. They are the same exact as Bybit now in terms of liquidity, but right now is specifically something I could offer you guys a little bit of insight that I think can more or less assuage or abate any fears. And it's because the last 2 days there's been a ton of fears around exchanges. And if you're not familiar with what Phemex is, the link's below, Phemex.trade. That's connected to all of our promotions. You can gain access to bonuses through that. So if you use that link, Phemex.trade. I ended up obviously reaching out to the Phemex team, reached out to a bunch of exchanges, obviously, because you want to know what's going on around a time like this. There's so many rumors that are circulating because of what's taking place with 3AC. You know, they were connected to, they had a significant reach across the market. And so there's a chance that this contagion hasn't necessarily fully played out. And there's going to be some bodies that end up coming up to the surface. So earlier today, there were talks about Deribit. So the talks were that Deribit was, you know, because of Deribit's involvement with 3AC and, you know, the amount of lending parties that are potentially in trouble now, that Deribit was in trouble. They've since cleared that up, so that's good. That's one less thing that we have to, you know, that we need to like let our imaginations run wild with. Now, of course, teams can completely bullshit, but you know, there is a degree of transparency when it comes to seeing like an exchange's hot wallet, cold wallet, you know, their insurance fund, and also, you know, I've been lucky enough to have relationships with some people that are, you know, at the top of the food chain when it comes to exchanges and people that deal with the exchanges. So Deribit looks good. Phemex is good. One thing that Phemex did early on, so Jack didn't want to do anything. Jack didn't want to lend anything. He didn't want to get messy early on. They just wanted to develop a very simple exchange that was, you know, it was slower moving than FTX. FTX is in the middle of like listing every project, every possible thing that you could possibly gamble on. You name it, they're listing it. And Phemex wanted to move slowly, and that ended up obviously benefiting them during a time like this because they have no involvement with any of the parties. Obviously, market makers across exchanges are doing a little bit of shuffling of capital, you know, because of what's taken place, but they have dedicated market makers that are completely fine, and it was really good to hear that because I talk about Phemex. So I want to get that out of the way. Not a shill, right? You trade wherever you want to trade. I trade everywhere. So I should say I've traded everywhere. And I will go exactly where I think I'm best trading, right? So I think that everyone should do that, but it's always good to know somebody who has a little bit more information, especially during a time like this. Last thing, Horses for Courses. This is the new YouTube channel. Go ahead and subscribe to this. Go ahead and put alerts on this. I am in the background right now. I am formulating a plan for this page, and it's going to be more than just live streams and more than just market related, you know, direct market related content. I've always said for a long time, you know, if for any of you who have been following me for a while, you know that one, this is a norm, you know, in the beginning of a stream, me talking a lot and not talking about the chart yet. But I think this is just who I am. So I'm not fake. I come on here. I lose my course, you know, my train of thought frequently. This is who I am, and I think that's what's allows you to get closer to people and to develop, you know, a level of trust in even what I say. Right? You kind of know who the person is on the other microphone a bit better than just someone who's like a complete anon. So when I first came to crypto Twitter, I was doxxed. Right? I'd come from FinTwit. Being on FinTwit since 2012, all right, or 2013, I can't remember. And so I transitioned and created a CT account, and I figured that there was a year where I deleted Twitter, so there was a little bit of a gap. I created a CT account. I'm thinking, well, I'm just gonna, you know, what do you do? I'm on LinkedIn also. Like, you put your face on, you put your best foot forward, like. And that was completely an uncanny thing to do in crypto Twitter. So I was sharing a lot of videos early on, a lot of rants. I stopped doing that. But I'm going to go back to some form of vlogging. So I'm going to have a lot of video content on here. And it's not just going to be charts. It's going to be things that, listen, I know that you guys are probably interested in sometimes just hearing me talk about the market in maybe a Q&A format. We'll have a chat up. We'll do live streams where I'll just answer questions. Right? I will go through my day-to-day process. I'll document that. And yeah, this will be just filled with content. So go ahead and subscribe to this page. That brings us to where we currently are. Now, listen, the market isn't untradeable right now. The market isn't untradeable at all. You hear that boot doo in the background? That was apparently a package was just delivered. The market is not it's not untradeable at all right now. So if anything comes up during the stream, we'll go ahead and we'll trade during the stream. And I'll obviously talk about the setups that we're looking for anyway. But the market is not tradable at all right now. Is not untradeable, excuse me. The market is very tradable. What's difficult right now is actually trading, right? Concentrating because of the amount of noise that's taking, the amount of noise in the environment. And this is nothing, I'm just gonna let you know, throughout the course of history in markets, none of this is new. The magnitude of what's happened, right? The large blowups, none of these are new. History is littered with cases like this. Each single case, right, might be different, right? They're all snowflakes, they're all different, but they're all the same, right? All snowflakes are different, but they're all the same, right? It's frozen ice crystals, right, around, what is it, piece of dust or debris. So they all might look different when you're zoomed in, but they're all the same. So nothing that's taking place right now is new. Nothing is taking place that's new. All right, it's just different. It's different in a new way, but it is all. This is always taking place throughout history. Large blowups, people using too much leverage, major market washouts. We've done this times before, and honestly, the funny thing about this is, and I think that you have to imagine that with social media, as social media has grown, and the activity in markets has spilled over into social media, and there is this relationship that they have now. That there's going to be much more intense emotion that might not necessarily correspond with even movements in price. So we've actually had less of a drawdown still. So we aren't even back down to where we've been in the past in terms of the drawdown from the high. But it feels right now. It felt 2 days ago. I didn't sleep. Right? I slept maybe 2 hours because the market felt like it was falling apart, right? I couldn't keep up with the amount of FUD that was on the timeline. And I am able to probably keep my head better than 99% of people, but that doesn't mean that I don't react during, I don't have like the same adrenaline during a gun battle like you guys do. I still have that effect. It's just, I can probably manage it better, but I still, left and right, there's something hitting the tape, hitting the screen, hitting the news feed. And I have to go about the next couple minutes verifying through sources that are really credible, hey, what's the deal with this? Because I am exposed, right? So I always have, and during a time like this is really important. And we're in the middle of a range right now, guys, so it's good to talk right now, and I'll point out, the levels that I'm interested in. We'll take a look at the charts. But it's really important that you have a plan. So not only do you approach the market with a plan, like today we approach the market with a plan. We're looking at first time the value is inside value. It looks like we have overlap beginning to range. We have very clear areas we can get involved. So we know when we should be drawn into the market, when we could sit out, when we should kind of just wait. We have a plan, right? If you don't have a plan, you're hoping that you could rely on just quick thinking and instinct. And when the market's moving quickly, you're going to stress test that process. So when there is some type of larger system-wide event, systematic risk, right? You have to have a plan for these times, because the first thing that you're going to be thinking of doing is probably taking money off of exchanges, right? So you should have a plan, though, about how you're going to go about doing that. What are the first things that you do? Where are you going to put money? What are you going to swap? All right. Are you going to cold storage? Are you taking money out into your bank? The point is, you have to have like a break glass if emergency plan. Otherwise, you could be caught you could be caught in a panic. Another part of that is, and this is what you should be doing, and you probably have been doing this naturally over time, is you want to be curating a good set of sources for information. People that that you could lean on as being providers of more signal than garbage noise. So during a time like this, everybody wants engagement. So there are people that I'm so close to telling them, dude, you're just fuck off. Like, you're trying to get engagement right now, you fucking loser. Like, people are freaking out, and you're just throwing this out there with no information or source or anything. It's just, it's just you trying to get engagement during a time like this when people are absolutely panicking and losing their heads. So it's really important that you have sources that you can lean on. Solid news sources, areas that you can look to, people that you can look to verify whether said information is even worth taking seriously. So have a backup plan, right? Have a set of sources that you can lean on and look towards. And then understand that even then, you obviously, like in markets, have to deal with variance and those even coming up short time to time. So right now, like I said, market is really tradable. I am not really. I didn't watch Powell's speech yesterday because I've decided that I was never a person who broke down the language to begin with. I traded catalysts, trading equity index futures, trading legacy, trading catalysts, right? Trading macro catalysts. I was never someone who was extremely savvy as a macro trader, right? That's an important distinction to make. And I think that even most of those macro traders are more or less fooling themselves. So I end up 99% of the time trading the order flow that I see. And if I am watching Powell, I am watching two things at that moment, right? So what I realized is that it's still showing up in the tape, right? Like most other things, I am kind of fooling myself thinking that somehow I am interpreting things faster than all of the machine learning algorithms that are, interpreting text and interpreting his speech. So it's just, I felt like I'm just going to omit this. I'm not watching him. The market is going to do exactly what the market's going to do, and that's where I'm going to get my information from. And that's what I'm more or less doing now. I'm just focused on the charts. We're at a very significant level of market structure. This is the most significant contextual level on the chart, right? We had significant contextual levels on the chart before here, okay? And we talked about this for a long time. Significant contextual levels. These are levels where things really change. We know that these are levels where a ton of participation occurs, where a large shuffling of positions occur, brings the market in. There's only a few levels on the chart that bring all participants in. So we talk about how, throughout this entire structure, we need a little bit of a change in ink color. Throughout this entire structure, we had small ranges, right? You had micro ranges, you had little areas where scalpers traded, where intraday traders traded. You only had some extremes where big position traders could trade and get in and out of positions. They're not interested in trading the intraday. They're not interested in, asset managers moving billions are not trading intraday. They're not trading, 500 to 1,000 point ranges. So they're not necessarily brought into the market, obviously, as much as scalpers are. So we don't normally have to deal with major contextual levels that often. When we do, sorry, I was taking a sip and talking at the same time and then also cracking my voice. We don't often deal with these levels frequently, right? When we do, we know that there's good short-term opportunities that are there. So the first time revisits of weekly, daily levels often lead to very predictable responses. When we do pass through them, that signals a significant change. So again, levels that bring in everybody, meaning let's say you were, a position trader and you got in from down here and we're still back here, messing around within this range, you could pretty much comfortably say that most position traders, investors, were really just looking at this level thinking, well, this is, the multi-month low, weekly structure. This is still intact, right? Unless this breaks, I'm not necessarily worried. Ranged traders, scalpers, intraday people, not necessarily concerned, right? They could trade throughout this entire structure, no real issue. But your position traders, your investors, they're really only leaning on a few things being maintained. They're not really concerned with the day-to-day, back and forth. They're not price sensitive in that way. They've accumulated over the course of a much larger structure, and they are not necessarily, as myopic as lower time frame traders. So that changed. Big change in direction. You don't fade, right? So I talked about multiple streams. It sounded funny to people that, hey, I'm only willing to buy for much higher, right? Well, it's because that's where the most high confidence buy is. So that just means, hey, it is what it is. I'm not confident buying right now. I ended up buying around the 200, but I ended up adding a little bit of spot. We'll go over that in a second. So This is a major contextual level. This is a major contextual level. So we're at a really good risk reward defined level. We are at the 200 day. Do I think that this is a good level to continuously lean on? I don't know. It's tough to say. I am still in the small spot that I added because that's for a much longer term view. And I stuck to my guns and added it because I said if we ever got back to the 200, I would absolutely add spot. People said, oh, you know, we're back here for this and this reason, like it's different this time. I have to remind everybody that when you're talking about a 200-week moving average, you're talking about something that you're going to get really far away from. And if you come back to it, chances are you got there for a pretty significant reason because it's a multi-sigma move to get away. Coming back to it means that there's been a big reversion to the mean. So each time that happens, it's going to be a different catalyst to get you there, a series of catalysts. But you're going to imagine that if you retrace all the way back to that level, on the way there's going to be some pretty bad things that come up. And again, narratives follow price quite significantly. So lower prices we have, the more media steps on the back of crypto's neck, the worse it gets from a press and media standpoint. So there's no good news right now. The only good news right now is that all the bad news is coming and we're still holding 20K. Now, I've heard people say that 20K is being defended because there's significant parties in this market that know if we break that, then all hell breaks loose. Either way, the 20K is holding right now. If we break below 20K, if we lose this level, yeah, that's the meme. What does that mean? What is this? That's lights on, and we're going to lights out, right? So if we break through this prior all-time high, this is not really a significant level at all. If we're looking at it from a profile standpoint, things look like this right now. Right, so no real activity, one-sided activity, no real structure. We accept back below. We're holding on to this one level, right, that's in a low volume node. But if we accept, we're just going back down, honestly. We'll go back down towards like 13, 12, 11. The fat of this area, as you can imagine, would be the most significant level on the chart. So we're holding the 200-day right now. Low time frames are still following equities. All right, so if we look at the S&P, just toss. And again, we're not even at the extent of the complete drawdowns from previous cycles. So emotions are running hotter than price actually is right now. If we look at the ES, and then we throw on some interesting choppy behavior locally. If we throw on BTC, they're more or less moving the same. So BTC is just acting like beta to the ES. So crypto is not decoupling. It's definitely not going to decouple if the S&P continues to move down. And the S&P also is in kind of a no man's land place. So the only spot that we found support initially, right, was, put this on yearly, was last year's point of control at 38's region. So this was our initial bounce, right? Point of control, high volume node last year. The next area we go to is more than likely down here. So there's no floor so far. It wouldn't be the first time that a market, listen, the markets don't have to respect what I say, but it's just the levels that we have on, that we have to lean on some kind of system. So could this end up bottoming out over here? Sure. But it's clear right now that there's no reason to be bullish. There's no reason to be bullish. I have to say that as clear as possible. There's no reason right now in the short term to be bullish. What we ultimately are hoping for is that with all the bearish things, that everyone who wants to sell has exhausted already. Because there is nothing right now to be bullish about. All right, we know that the Fed is ultra hawkish. They leave a little bit of optionality on the table, but as far as right now, we're really hoping that just organic buying takes place. We should have some kind of bearish rally either way, even if we moved all the way down. But blindly buying this right now, just kind of hoping that this is the bottom, that's how you become a 3AC. So the next major area of support, 33, 34 region, that right now is that's like, let's say that we're talking about 33. Let's say we're talking about 34. Let's be kind. 34, 7% drop. That's a 20% drop minimum in BTC. So it's usually a multiple of 3 to 4. I mean, Listen, the lower you go, the uglier it gets though, right? The more it speeds up. So if we talk about a 20% drop in BTC, right? If we get that, we're looking at 20%, looking at 16. And again, it's not like it's formulaic like that, right? That's just what you could absolutely expect. If that occurred and we were already close to a major level, then you'd say, okay, maybe that'd be where it stops. Like, that's a good level. But the point is, if we're looking at least a minimum drawdown because the S&P is dropping and we're still in here, we're just going way further, right? This will be one of the times out of all of the sample of results where, let's say they're all, if we have here's one axis, here's another, and here is all the levels of drawdown in multiples, and this is average, right, over time. Well, we're going to get one of those outliers, right, where when the S&P drops, 7%, crypto drops, another 50%. So there's nothing standing right here where everyone is relying right now on this prior all-time high holding. And maybe it does, maybe it doesn't. If we start accepting below, so just to get down to the low time frame right now, and I would not even, honestly, I would not even focus on things like funding. All right, people talking about, negative funding. Okay, open interest is not going up. This is spot driven. So this is spot driven selling. There is a ton of de-risking across the market. This is not a normal situation. There's still likely things that have yet to unwind. And when you're in a position like this, you sell what you have to, you don't sell what you want to. If they're trying to, for example, if you have people that are hurting right now and they're trying to recoup losses, there's going to be, you can imagine it's not done yet. So there's still unlocks. You just have to imagine that right now we are fighting a pretty strong stream upward. You're trying to swim stream upstream, and it's I don't know river ratings, but it's not one that you would want to swim upstream in. You're at the edge of the Victoria Falls. You're right at the edge, and you're deciding that's a good place to jump in to try to swim upstream. So funding is not necessarily a good signal right now because books are thin. So books are thinner. They're not too thin, right? You can still trade. So books are thinner, so it's harder to keep the spot and futures prices in line. You're going to get a lot of, I just think, mixed signals from funding. And open interest isn't going up. There's no major trap yet. There's a good chance that when we started bouncing yesterday that you got a good amount of longs that came into the market. If we look at CVD, strong current, yeah. If we look at CVD just compared to price is making lower highs. Change the, get a different drawing tool. Price is making lower highs, and the future CVD is pretty clear that this is ripping upward. So I am only focused on the low time frame right now. I said that I absolutely, it was something that I mechanically did, buying the 200 with spot. But just to zoom out, put that 200 on. If we close this daily like this right now, or if we start taking out these lows, I'll just exit that spot, because I feel like there are a few times where that it's probably a good idea to dollar cost average, right, over a longer term. But there might be a few situations where that you might get a better price for that addition that you were looking to put in. And if we are in a position where we are right now, where we're sitting above a gap, and how this market on the low time frames, if we have gaps, let's say here's a profile, here is price did this over the last couple days. We know that every time we've accepted, if we have been failed at the high and then accepted back in there, it's suicide to try to buy between there, right? The same thing when we created a gap on the way down. And just remember the last few days before the breakdown and the last couple weeks, we did this so many times. We gapped down, right? Price dropped. This is like a double distribution profile. We accepted above these highs, and then you're here and you're thinking, maybe this is just the lower high before it reverses. No, it's back in the gap. All of this was unchallenged positioning. and we're just going to rip back up to the other side. So shorting in here is a really dumb thing to do. So we're there right now, but on the highest of time frames, where on the highest of time frames, you have the most amount of people that are getting involved, the most amount of people that could panic. You know, the more you zoom out, the more participants that you bring into the picture. And you could kind of just extrapolate how individuals behave in a small sample out to a larger sample, right? It's more than likely that reflexivity takes over. And if we break below last year's high, prior all-time highs, then you're going to put in a very ugly move. So it doesn't even matter, guys, so that we're testing prior all-time highs for the longer term trend. I think you should more focus on what the longer term trend has been in terms of drawdowns. I don't think all-time highs matter. You know, if you go back to earlier portion of this market, it was thinner. Testing all-time highs and getting away from prior all-time highs. As the market gets thicker and moves up, it's more likely that, just to be clear, the long-term expectation of this market is more likely to do something like this, right? So notice how these are marginally lower, right? It's more likely to taper off. The returns over time are more likely to go down. So what that would mean is that at some point you're going to have that cycle that interacts with the previous cycle. And those things are just they're not strong things to lean on to say that we can't interact with the previous all-time high, especially when you consider just overall what the current context is versus previous context, previous macro environments. So low time frame wise right now, and if the S&P starts ripping up, I don't imagine Bitcoin wouldn't follow also. So we need the S&P to bottom. And until that happens, just expect the crypto will follow. So today is the first day, though, where we've had, where we've maintained the prior day's value. So if you look at, the last couple days, the last, last week, basically, we have strong trend down, a little bit of ranging occurring, but still notice how value has migrated lower. So price is able to continue to trade lower. Sellers are still in control. And this is the first time that we've actually had inside value. So today's value area inside of the prior value. So this is the sign that you're going to begin to consolidate, right? I mean, we're further into it now, but when you are trending for a long period of time and you have that value overlap, the market is somewhat exhausted. It's somewhat taking a pause. It's giving you some pretty clean levels of trade now. So where we are right now, no trade zone. Smack dab in the middle of value, yesterday's point of control, most friendly area for liquidity, easiest area to get flat-footed, no trade zone right here. So the best possible areas that I would want to trade from is some kind of revisit towards the low. So revisit down there, one sec. Or some kind of reclaim of yesterday's value. So because basically we have a balanced, a balanced structure forming that'll form some kind of composite. Right? And right now you have poor lows at yesterday's low. So down here, we don't have any excess yet. We have excess at today's high. So I think the likely outcome is that you chop within here, however that looks, I don't care, right? But you end up coming down and revisiting this low. So this low would be an area where I would look to see maybe some kind of trap further develop, right? Maybe sellers get really aggressive and spreads blow out and passive sellers are not following this down and you have some kind of trap form down there. Or honestly, if we start accepting below this low, that'd be a really fast move, honestly. If you had something that started accepting below here and you're expanding that fast, it's a really ugly trend though, right? So a couple days worth of trend, 1 day of balance, and then breakdown. Usually you have like 2-3 days of balance. So usually you're left with something that is 2-3 days of this. But if you end up accepting, and this is going to be something that's going to be very nuanced, if this immediately shows signs of failure here, like let's say we're down here, we lick into this area, and there's nothing, right? And price is struggling here I might just slam short, stop above this high, and look to short the breakdown. And at that point, I'm already out of my spot position. If we continue to just like dwindle down here, I'll probably just exit that spot edition anyway. So these areas, right? Yesterday's value area high, today's value area high, and yesterday's are pretty much in line. So if you get something that starts basing out and holding above 21.8, 22, then I'll probably look for another short-term trade up to 22.6, 22.8 region. And this I would not expect, honestly, to do much more than that. I'm not looking for like, I mean, we have above us a structure that is one-sided, right? It's not like there's any singles within it. So this move here is pretty efficient. So on the way down, there's no real single prints. There's no real imbalances of unchallenged positioning. So when you have an imbalance and single prints on the way down and you have like a gap, then if you accept back in there, it's really easy to cover that distance. But this was not necessarily the case. So I wouldn't, in this case, unless you had like a high time frame close, I'm not looking at this structure thinking like, oh, we're going to, like right now, we're going to come back up here and rip up like we have it in us to do that. I don't think we do because it's just there's too much heaviness across markets right now. So I'm leaning more bearish in the short term and looking for, the possible revisit of the possible range play to progress and another setup down here at these lows. Does this all make sense? And I think Bitcoin is honestly one of the only games in town right now. Signs of strength were obvious, though, in AVAX and Solana. But I think it's important to know that, so if we look at AVAX BTC, if we look at Solana BTC even more, a lot of strength in these pairs against Bitcoin. Now, going back to what I said earlier, there are setups in this market in alts because alts are so retail driven more than BTC, right? BTC is more macro driven now. There's a lot more higher frequency applications in BTC than there are in alts. It's more like, your ES or your S&P futures, trades more like those now than it trades like, what it used to before 2020. So alts are they still have like a lot of reliability when it comes to just TA levels being able to be leaned on. So, first time retest of daily and weekly levels for BTC might get completely smoked. And if they're getting smoked in BTC and you're looking at the same levels in alts, then yeah, it's probably gonna get smoked in alts too. But they're not as reliable all the time still. Like, you might have a daily, weekly close, high time frame pivot in BTC, but price might not necessarily respect it as surgically as it did in the past. Alts are almost guaranteed to give you significant bounces at those first time retests. So for example, important contextual level, that is a weekly close, right? Weekly close, significant daily level, right? The lows of this prior structure before that bigger move up. But primarily that's your weekly close, right? Talking about weekly higher time frame closes and pivots like this. So first time retests over a long period of time. This could be a month, could be a week, and it could be, the longer it is, the more actionable it is. So first time retests are things that are, in my opinion, high probability setups. And these are ones that I want to always take no matter what. So in this one I didn't get to take because I wasn't paying attention. So this is why alerts are important. Not trying to LARP or anything. I didn't get to take this trade. But you look through your charts and you'll see how many times this manifests positively. So mechanical setup in that, you're buying this, maybe you give it one kind of, a little bit of breathing room, maybe 1 ATR, 2 ATR, and you're getting a significant move off of it. We've had a 30+% bounce off of this. I'm not talking about holding out for that necessarily. You could formulate some kind of system where you say, I take these trades all the time, I cut them manually at 5% each time, or I cut them manually at 3% each time. And maybe they run more, but I know that those trades are easy to lean on for that amount. So with Solana, with AVAX coming into, or more so Solana, came into a very significant contextual level, took out that low, bounced. There was signs of strength against BTC. I would imagine that there were signs of strength because of that. This is my theory. It's not like I think that Solana is going to go on to rip without Bitcoin. This is what I want to clarify. Signs of strength right now, I think, are short-lived. So one, important contextual level, so right here, resting orders sitting, waiting for that to come back, right? These are OCO orders that are left on for a long period of time. The revisit is really actionable, so getting involved because of that. And then you also have to imagine that Solana also doesn't have the same contagion selling pressure that Bitcoin had, right? Because of what took place with Celsius, what took place across the general market. So there is a combination of things that has given this short-term idiosyncratic strength, but I don't necessarily know if it's something that you could really lean on. The only way I would want to lean on this, so Solana or AVAX, is if they go on to do what Bitcoin still needs to go on to do anyway, because the market, again, the market is not in a position from a fuel standpoint, so from an open interest fuel standpoint, to rip and rally. The only fuel that we're relying on is fuel that comes back in from confidence, and that's sideline cash. So more than likely, what we're not going to get is a big short squeeze across the board, right? We're going to get rallies that come back when it looks like there's a little bit of momentum. And that occurs after you've developed some kind of base. So with AVAX, one of the reasons why I said I was shorting it still down here, so I talked this is 3 live streams ago now, why I was shorting AVAX into this structure. And I had said, maybe it's bottoming, but it's still going to put in time to put this bottom in. And it just looked too similar for me to not take it. So between this fractal and this, fractals are, there are many ways that people use them too much, but at least it gives you some kind of technical invalidation, because I'm saying the fractal that I think is actionable should just look like this, where this is the outcome. If it starts to do something that doesn't follow with that, well, then it's clearly wrong. So at least I could say, hey, it's just a good defined short, right? Short here, I'm looking to close out at the low of this box. So this box I drew before all this price action happened. Right, so all I did was say, okay, you're looking at around a 56% drawdown there, and this is roughly around the same. So from the first bounce high right here, 50+% drawdown, I'm just trying to extrapolate based on that. So we're getting that, but now what would still need to happen is the market is ultimately, we're looking to, and this is why I say box things out. You do this on the 15-minute, you do it on the 5, you can do it on the daily. Box things out to give yourself an idea of how long it would develop. So you could lean on something, right? So let's say that we end up double testing this low, and then we're doing something like this. Well, then that's my trade again, right? Now you might say that that's a good trade opportunity, or let's say the market pops up here and then just tags this low and then is just back closing above. And then maybe you take a trade a little early based on that. Me personally, I would only be able to take a trade confidently back up to that high at that point, because that's just how I trade. So if I was getting long here based on a trap setting up right here, 9 times out of 10 I'm closing at this high. I don't like to hold things through in this environment, but give me a wider setup or a wider first sticky area. So if we move sideways, tag this, we're back above here. Well, then I'm looking at this and I'm thinking, well, we're coming back up to that. So, and then I'm able to, if we're back up here, then I'm more likely to manage the position and trail a stop up and leave this running a little bit longer and take profit partially rather than just completely clip the position. So I don't think alts right now are compelling. There's a few of them that intraday, good trades, but when I say compelling, I mean you should not be. If you have long-term positions that you want to build, by all means, where 99% of alts are 90+% off the highs. So you could say, hey, I waited all this time to buy a dip in XYZ, and don't go Googling XYZ pair. It might be a pair, but it sounds like Tezos was Tezos XTZ. But my point is, yeah, this is what would qualify as blood. But we know that alts are not like Apple, right? We know that alts are not like components in the S&P. We know that there's a really strong argument to be made for this being mostly garbage, which is kind of sad when you think about it, right? But operating with that in mind, right? At least you can that can help you instill some kind of risk management or disaster control in yourself, right? So yes, there will be a call in today. The call in today will be at 2:30. So after this at 2:30. So BTC ranging, I think I went over the levels that I clearly would want to play. It looks like we still have not the same energy. So going back, I was trading the 30-second and the 1-minute chart when we were back here. We still have a decent amount of movement to price, but it's slowing down a little bit. So I don't really like to trade the low time frames, like the 1-minute or the tick charts, unless price has a good amount of zip to it. So without that, if we're dying down a little bit, I'll probably lean on the more like obvious intraday levels, rather than play like the lower, the rotate. I honestly, looking at this now and not having paid attention, I probably would have looked to trade off of VWAP. That would have been a decent short opportunity. But it does look like things are slowing down, which is, that's what normally would happen after you've dumped the way we did. Price would base out, temporarily, and then maybe we get another big leg. Maybe not. Maybe we just have a bit more of a range to trade. Sorry, I missed your last question. When I stream, I don't really pay attention. I noticed I used to read the chat more when I streamed, and it would throw me off. So ask questions now, though, because I'm going to be looking back and forth. I think I covered everything I more or less wanted to cover. And remember, 17 Bidding he writes phenomenal stream reviews, and they will be up right after this, or sometime today, whenever he could get around to it. Looking at we have a composite forming. So for those of you that are, always ask how you form composites, here is, oh, hey, what's going on? Here are the beginning signs of a range forming when you have less value overlap, less value migration. So here's value moving down, that's value migration. So there's less than 50% overlap. Now you have complete inside value. So this is something that I would form a composite for. So let's say we close today out. I am taking today's profile, merging it, forming a composite, establishing the composite's value area, and then I probably just end up splitting it again. So now I know, okay, so the last 2 days, this is the value area low, this is the value area high, and we're really balanced at this point. So we're more rotational, we're more balanced, gives you a bit of context. Okay, if you're buying here, if you're selling here, you're in an unfair position to really define risk. Whereas it's better to play at the extremes. Get something like this, get something like this. It's a little bit more certain where price is accepted right here and where it should be rejected. Just look through the chat. Yeah, XYZ zippers. Pretty sure the kid whose parent created that company went to college with me. My first year of college, so I went to Hofstra University. It's a private school here in New York. The only thing that made it worth being private, it was a good education, but there was an arboretum on campus, which was really nice, and it was in the middle of Hempstead, which is tough to make look nice, but beautiful campus. But someone made a joke, the other thing that makes private school private is the leather seats in the auditorium instead of the cloth seats. But there was a kid who had like multiple Porsches freshman year of college, and when I was a freshman in college, I couldn't even drive. Like, you weren't allowed to have a car, so it was kind of weird. And then everyone had said, oh no, that kid's parents, they created XYZ, or he inherited XYZ zipper company. Could be complete bullshit. But anyway, no, I'm not shorting anything related to Tron. I'm just gonna go through the chat real quick. I saw those. Yeah, but funding has to be really negative. It can't just be negative and on and off across a few exchanges. It has to be. So for example, if we look at just futures data, right now, we'll go through funding. Binance's coin margin, Binance's USD margin, USDT margin has a higher open interest. That's nothing. That's neutral. So that's not even a basis point. It's half of a basis point. So when it's more, when it's not neutral, there's a different case to be made. But there is negative values and positive values that basically fall within neutral. So. Yeah, dips below 20 will probably drop the floor out in alts in ways that people wouldn't imagine, because they can't imagine that there can't be a floor from where we are now, because you're already 90+% down. But remember, alts can just create new areas of real estate on your trading view. You're looking at, one of the things that people do is when they look at a chart, they enforce some kind of threshold onto it based on the forced perspective of looking at margins. So especially in alts, you're looking at it and you're thinking, if it's rounding out here, oh, that's a bottom it's a bottom structure, but you're forgetting that when you zoom out on a lot of alts, they've just continued to go past what is currently recorded on this region of the chart. So when I am actually looking at, for the purpose of streaming, a lot of times I just defer to using the trading view, because it's the thing that most people have access to, that it's free, or that the free level allows you to have VP. But when I'm looking at my TPO charts, I have a volume profile and a TPO. And I make sure that the volume profile and the TPO are more or less matching, because the idea is price confirms, or volume confirms price. So if you have a weird discrepancy between the volume profile and the TPO, that is a signal in and of itself. Especially when you have like excess in a TPO profile and you don't have excess in the volume profile, or you have a fat part of a TPO profile and you have excess in the volume profile. So you could gain different insight from both of those cases. One, it might be a trap, right? A lot of volume caught below in an area where we didn't spend much time, and the other could be a sign of exhaustion or just a lack of interest. No, I'm not selling. No, we're not at the point of me selling my entire stack. If we went down to 12K, 13K, I would still be up multiples, and I would not sell my entire stack. I mean, could I sell my entire stack and then, buy back lower? Yeah, but at that point, you sell your entire stack, you incur a taxable event for that. At that point, it's long-term capital gains. Yeah, you could beat that in percentage terms from the return, right, that you might get from the recovery from there. But for me, honestly, like the long-term stuff that I have that's in cold storage, that's also multi-sigged, it's an amount for me that I feel like if you're a long-term believer in something, you can't get too flexible in how you're trying to get in and out. And if I am investing in something, 3 to 5 years is an investment. It's not like if I sold all my Bitcoin, I would also have to say that I don't have confidence in the long term. But as long as I have a sliver of confidence, and I do have way more than a sliver, then I just can't see a reason to. It becomes too much work to try to trade your portfolio, put it that way. It's not going to change my life meaningfully if I sold it. If it goes down, right? If it goes down to 12K, 10K, it's still going to be a good return. Oh, you did. Sorry about that, bud. Chris with a beard. Let's see. Rising perp CVD, falling price means in the context of market participants. Good question. So when I was just looking at CVD, and so really quickly, I'm creating a new YouTube. I'm going to also be, so I'm trying to figure all this stuff out because it's not my forte. I want to have all the things that I post on the YouTube also be posted on TikTok, also be posted on Instagram, so that I can, some people don't use YouTube, some people don't use Instagram, some people don't use Twitter. So what I found, and I couldn't believe it, right, is that some of my followers are not really even on Twitter that much. So I'm trying to find something that literally posts all my content across all platforms. and then I'm going to make a bunch of announcements. But one of the things that I'm going to be doing is putting together like a really short introductory, course that I can give you guys that is basically what I notice is there's a lot of repeat questions of things that are pretty basic that, as you can imagine, I don't want to go over all the time during streams. So it would be helpful if I just put together a little bit of an explainer, make that available to you guys. And then I'll offer a really in-depth workshop, hopefully towards the end of the summer, and some kind of, other program and helpful work. What did I say? Okay, I'm in my brain, I'm thinking not a webinar, it's a workshop, right? So I have a bunch of things that I obviously want to bring out, but I clearly have to structure them a little bit better. But the CVD is pretty basic. I'll go over it again. We look at price and CVD. So this is cumulative volume delta. This is rising, but price is dropping. So if you want to see that if buyers are coming in, right? So let's say that this is, here is price rising. Normally you would want to see CVD following price. So CVD doing roughly that. If you see that price is rising like that and CVD is doing this, oh, wait 1 sec. And it's not as high. There's a couple things you could take from that. You could say that buyers are no longer as aggressive. Price might be rising because passive buyers are still lifting, right? They might be following this up. Price might be moving more than buyers are actually buying because conditions are thinner. That's one type of divergence. The most ugly divergence that we talk about, and the one that I reference the most, is something where we have right now, where you have price doing something like this. Let's say that in the case it's a high, it could be at the lows, and CVD is doing something like this. So what you have is you have a high, a lower high, and you have a high and then a higher high in CVD. So there's a pretty stark divergence between CVD and price. And what that means is that on this side of the range where you had more, what I'll do, hold on 1 sec, because I notice, here we go. I'll use my own drawing tools, so I'll just change the ink. Range high, right? Equal highs in price, CVD doing this, making a higher high. This means that there was much more liquidity and much more friction on this side. So even though you had more buying, price is trying to go upward, right? What is price trying to do? Price is trying to go up, but it's doing a bad job of getting there. That means that the heavier hand is in the limit order above selling, right? So that's absorption. That's what that is. That's very clear absorption. So this, a case where you have, over the course of this structure, very obvious equal highs, but you have CVD doing this, it's clear that there is a thick ask above. So someone is providing liquidity up there, enough that all of those buyers coming in, right, the large amount of buyers that we had coming in, even though there was more from left to right, so there were more buyers over here than there were over here, there was less progress. So it's just a sign of absorption. High Nebraskan Gooner. Why is he doing that? I think actually there's a few people that put out good education that are just realizing that it doesn't make sense to not have exposure across all platforms. I mean, it would be kind of silly to say like, I'm only going to post this on, like, for example, whenever I started streaming, I kept asking, Echo, and this is directed towards you, I kept asking, hey, is everybody, who wants, who likes me to stream on Twitch? Who likes me to stream on YouTube? I actually forgot to reset this up, so I haven't been on Twitch because of that. I couldn't figure out why they kept deleting my videos, but I just realized that they don't store them anymore unless you, I guess, elect to have them stored. But I kept asking, hey, who wants me to be on Twitch? Who wants me to be on YouTube? And then you realize that you actually can integrate, like on your Streamlabs, you could integrate your stream through all of those platforms or both of those. So like I was just saying, if I could post on YouTube and there's some kind of third-party platform that could post it across other platforms, like why wouldn't I use that? I can't believe it. I don't use TikTok. Right? I don't use TikTok. My wife is on TikTok. I don't use TikTok. But apparently it's the most popular social media platform. And here I am thinking Twitter is the best one, but it just it's my bias. I think Twitter is the place where all the brains are. I think anything that's related to just videos and pictures is clearly lower IQ. I mean, not to disparage anybody, but hey, look at my picture of my muscles versus having actual intellectual debates on Twitter. Although they don't get anywhere anyway, so maybe we're the idiots. So, we have a call in 20 minutes. We use the Hootsuite at the SAS company I work for, but it's not sure if I don't know. I'll figure it out. Hey, if it doesn't work, I mean, if I can't post on it, then I'm not going to start to figure out how to make TikTok videos. I did speak about the SOP earlier in the video. I don't want to go over it all, completely rehash it. Bitcoin, I showed a correlation chart. They're still there. Correlation is still really strong. I'll put on the correlation coefficient just to make it obvious. But one sec. I shared the yearly profiles. If we lose this one, we're just going back down to last year's point of control around 34. But here's your correlation coefficient. Daily, weekly, it's as high as ever. Brief decoupling recently, but it's still very positively correlated. Lower time frames back there, right? So, oh geez, Ross, I've heard that too. But I've heard they use it to infiltrate United States citizens to make them dumber. So I don't know. I'll let you know if things change for me if I start using it and I start becoming dumber. Oh, you can use restreams, live streams to TikTok. Yeah, so that's cool. Good to know. Good stuff. Yeah, so Alex, I can do that actually because I know that you can't do that if you monetize. So like if you're a YouTuber and you monetize your YouTube or if you monetize your Twitch, then you can't do that because they obviously want, they want, you to be exclusive with them. But I'll definitely look into that because that's one of the benefits of our channel, and the channel that I created is I'm not going to monetize it. Not to say that I'm not going to, listen, guys, I got a kid coming, okay? If someone wants to partner with me on my streams, I'm not going to turn away the money if it's a good project. And that doesn't mean I'm joking about, like, I would never partner with a token or anything like that. But I'm talking like, hey, if Monster Energy wants to partner with me. No, for me, it's more like if Cafe Bustelo wants to partner with me, I'm not turning down the money. But we don't YouTube, like, people can get paid from their actual views, right? We've never had that. So anyway, guys, I think that'll be it. I think I covered everything I wanted to cover. Listen, when I said, hey, follow the new YouTube, and I mentioned the plans with respect to what I'm going to do, it's still in progress, so it's not exactly the most concrete thing yet, but I will update you guys every stream when I have more of a clear idea of exactly the direction I'm going, and you'll start to see the content that I post. And no one will miss anything. I guess that's what I'm getting at. You won't miss out. It'll be inclusive. All right, that'll be it. Do we have any other new news? So this is exactly what I'm talking about, and Mike is making a joke about it. This is basically the the feed the last 2 days. The feed is basically littered with this. If you only knew what I know, right? Oh God, I heard some terrible stuff. Someone wrote, oh God, did you hear about USDC? It's like, no, and don't write that, you fucking dickhead. Because you don't either. So, all right, guys. Yeah, I know about, I've not, so now that the cat is out of the bag, I've known about 3AC. So I knew over 24 hours ago most of the details, but I didn't want to be that person on the timeline. And also the chats that I'm in, I respect the people, so I didn't want to say anything. So there are a couple times when I'll find something out that I can't really say much about. Not because I have any kind of agreement, but it's not the right thing to do. All right, that'll be it. Have a fantastic evening. I'll post a call-in link in a minute or two. And remember, it's a half-hour call-in. Come in, ask questions. And yeah, if not, have